Most advice about building wealth is outdated. Save, invest in your 401k, buy a house. Sound familiar? But the truly wealthy play a different game, with different rules and much better outcomes. The financial system isn't broken. It's designed to reward those who understand its inner workings. The gap between the rich and everyone else is about knowledge, not just income. Today, I'll reveal 5 core truths the wealthy use to multiply their money and build generational wealth. Let's pull back the curtain and get started. Truth number 1. The wealthy don't just buy stocks and bonds like the average investor. They understand that true wealth creation often lies beyond the conventional investment options that are readily available to the public. They're not just passively participating in the market, they're actively seeking opportunities that offer the potential for exponential growth. Instead, they invest in private markets, a realm often hidden from the everyday investor. These markets offer a different landscape, one where deals are negotiated behind closed doors and opportunities are presented to a select few. While most people stick to public stocks, diligently watching the daily fluctuations and hoping for modest gains, the wealthy get in early with private equity, acquiring ownership stakes in promising companies before they even consider going public. This allows them to benefit from the company's growth from its earliest stages. They also delve into venture capital, providing crucial funding to innovative startups with the potential to disrupt entire industries. And of course, they explore exclusive real estate deals, acquiring prime properties and development opportunities that offer substantial returns. These opportunities aren't advertised on mainstream financial news channels or promoted through online brokerage platforms. They're shared within exclusive networks, passed along through trusted relationships and insider circles. These opportunities are carefully vetted and reserved for those with access, those who have cultivated the right connections and possess the financial resources to participate. Imagine investing in Uber in its infancy, before it revolutionized the transportation industry, or Airbnb before anyone else even heard of them, capitalizing on the burgeoning home-sharing economy. By the time these companies go public and become household names, most of the explosive growth, the period of hyper-expansion and significant value creation, is already captured by those early investors. The key isn't to feel left out or envious of those who had access to these early opportunities, but to realize the universe of investments is much bigger, far more expansive, than what's typically presented on the news or discussed in mainstream financial circles. Start thinking like a private investor. Adopt a mindset that seeks out hidden potential and unconventional opportunities. Look for value before it's obvious, before the masses recognize the potential and drive up the price. Seek out alternative investments. Explore asset classes beyond the traditional stocks and bonds. Consider real estate crowdfunding, which allows you to invest in property development projects with relatively small amounts of capital. Explore opportunities to invest in local businesses, supporting your community while potentially generating attractive returns, or niche funds that focus on specific sectors or investment strategies. The wealthy prioritize access to exclusive deals, understanding that these opportunities are often the key to unlocking significant wealth creation. Because that's where outsized returns are found, where the potential for exponential growth far exceeds the limitations of traditional investments. And to access these deals, to gain entry into these exclusive investment circles, they often use a powerful tool, leverage, strategically employing debt to amplify their investment returns. Let's talk about debt and how the wealthy use it as a strategic tool to build wealth rather than a burden to be avoided. Truth number 2, and this is a big one, often misunderstood, but absolutely crucial for building lasting wealth. The wealthy understand a fundamental principle. They use debt strategically to build assets, not liabilities. It's a completely different mindset than how most people approach borrowing. For most people, debt means stress, a constant weight hanging over their heads, a source of anxiety and sleepless nights. It comes in the form of credit cards with sky-high interest rates, car loans that depreciate the moment you drive off the lot, and student debt that can take decades to repay. These are liabilities, things that take money out of your pocket. But the wealthy see debt differently. They use debt as leverage, a tool to amplify their financial power. They strategically borrow money to buy appreciating, income-producing assets. These are assets that increase in value over time and generate cash flow. For example, they might put 20% down on a property, a strategic investment in a tangible asset, and then borrow the rest from the bank, securing a mortgage to finance the purchase. Then, they rent out the property, letting tenants pay the mortgage each month, effectively using other people's money to cover their debt. All the while, the asset grows in value, increasing their net worth and building equity. So, in essence, the bank's money, the borrowed capital, is actively building their wealth. It's a powerful concept when understood and applied correctly. The average person pays interest on liabilities, draining their resources. The wealthy, on the other hand, strategically earn returns on borrowed capital, turning debt into a profit-generating engine. This principle isn't just limited to real estate. It applies to business ventures, strategic stock market investments, and a wide range of other opportunities. The core principle remains the same. Use leverage to amplify returns, maximizing your potential gains. But remember, it's crucial to manage risk carefully. Leverage can be a double-edged sword. The wealthy don't just blindly borrow money. They meticulously analyze deals, rigorously stress-test investments under various economic scenarios, and only borrow when the math works, ensuring that the potential returns significantly outweigh the risks. Stop fearing debt as an insurmountable obstacle. Learn to understand it, manage it, and use it as a powerful tool for accelerating your financial growth. And once you start generating income and building wealth, there's another challenge that arises: navigating the complexities of taxes. Here's how the wealthy strategically handle that aspect of wealth management, minimizing their tax burden and maximizing their after-tax returns. Truth number 3, a critical element in building wealth that often gets overlooked. The wealthy keep more of what they earn, not necessarily because they earn more, but because they master the tax code. They understand the nuances, the loopholes, and the legal strategies available to them. It's not about avoiding taxes illegally. It's about strategically minimizing their tax burden within the bounds of the law. Most people pay high taxes, often the highest rates, on W-2 income. This is because taxes are automatically deducted, and many are unaware of the alternative strategies available. But the wealthy often earn through investments and businesses, which are frequently taxed at significantly lower rates. This is a fundamental difference in how income is generated and, consequently, how it's taxed. They understand that building wealth isn't just about earning a high income. It's about optimizing how that income is taxed. They proactively use legal strategies, like depreciation, which allows them to deduct the cost of an asset over its useful life. Business deductions, covering a wide range of expenses from home office costs to vehicle usage, and capital gains, which are taxed at lower rates than ordinary income when assets are held for a certain period, all to minimize taxes. The tax code is full of incentives, specifically designed for investors and business owners who are willing to learn and utilize them. These incentives are not secrets, but rather publicly available opportunities. The wealthy understand the complexity of the tax code, so they hire top CPAs and engage in proactive tax planning year-round, not just when tax season rolls around, to strategically reduce their tax bill. Every dollar saved on taxes is another dollar available to reinvest and compound, accelerating wealth accumulation. Over decades, this seemingly small difference in tax strategy makes a massive difference in net worth, creating a significant wealth gap. Don't just passively accept your tax bill. Become an active tax planner, taking control of your financial future. Learn the rules of the game, seek professional advice from qualified experts, and proactively use the incentives available to you to your advantage. And remember, much of this valuable knowledge and insight comes from your network, so cultivate relationships with those who understand the power of tax optimization. Truth number 4. Your network is your net worth. The wealthy build powerful networks for information, opportunities, and partnerships. Exclusive deals and insider knowledge flow through these connections, not Google searches. A strong network is a brain trust for smarter decisions and fewer mistakes. Who you spend time with shapes your mindset and opportunities. You don't need to be born into wealth. Intentionally build your network. Join industry groups, attend events, connect with mentors, and provide value first. The wealthy treat networking as a strategic investment, not just socializing. Every new connection is a potential door to opportunity, and a strong network is essential for playing the long game. Truth number 5. The wealthy play the long game. They focus on building and preserving wealth for generations, not chasing quick wins. While others panic or chase fads, the wealthy invest in assets they plan to hold for decades. They let compound interest work its magic, reinvesting returns year after year. Their horizon isn't just retirement, it's their great-grandchildren's future. They build networks, structure taxes, and analyze deals with a multi-generational plan. It's about discipline, patience, and sticking to a strategy through ups and downs. Wealth is built brick by brick, decision by decision, over a lifetime. Adopt this mindset, and you'll avoid common pitfalls and build lasting wealth. Now, the choice is yours. You've just learned the 5 hidden truths the wealthy use every single day. Private investments, strategic debt, tax optimization, powerful networks, and a long-term mindset. The system is rigged, but now you know how to play the game well. Will you take action or go back to old habits? Start thinking differently, seek new opportunities, and build your network. Subscribe for more no-fluff, actionable wealth strategies. Your financial future truly starts now.